What is up, Bitcoiners? Welcome back to FedWatch. It has been a minute since we had an episode with me and Ansel. I hope you enjoyed that Bitcoin Magazine podcast that we posted between Greg Foss and Dylan LeClaire talking about the macro outlook going into Bitcoin 2021. Now, Ansel and I, 2 weeks later, are going to follow up on Bitcoin 2021, as well as talk about all of this craziness that has been happening in all the markets, the macro markets, the Bitcoin market. But I guess before we get into this pretty hefty list of just Fed central bank macro updates, we got to meet for the first time 2 weeks ago in Miami. That was cool. You're taller than I expected. I feel like Zoom is the great equalizer. Short people look tall, tall people look short. And then, dude, Ansel is a strapping big guy.
Yeah, it was great to meet you. You were busy the first day, but then we got a chance to at least say hello for 5 minutes in the second day. And it was great to meet you. And you guys did a fantastic job. I wrote a debrief of my experience there on my blog. And overall, my big takeaway is that conference felt like Bitcoin from early adoption to mainstream. So I think Bitcoin has made it mainstream now.
That's freaking awesome. Yeah, I mean, you said that to me before this podcast comes out. Kevin O'Reilly came onto the Bitcoin Magazine podcast, and he said the same thing. He said that, wow, like that was the first time that I felt like Bitcoin went mainstream. And if you are listening to this podcast, you should go listen to the Kevin O'Reilly podcast. That is with Matt Odell and one of our really sharp interns, David Zell, who is doing really great things for our company. But that was a great podcast. And Kevin had some surprisingly pro-Bitcoin things to say. I think he gets it a little bit more than maybe people may give him credit. And he's learning in public. He admitted that, and he said that he can learn, and he is learning about Bitcoin every single day, and it is consuming his mind. So I think that we're going to see this across a lot of skeptics and haters. They're going to flip, and maybe this is an opportunity for them to buy the dip.
Absolutely. And we've all been there, right? We've all gone down the Bitcoin rabbit hole. And most people think when they get to Bitcoin, we can tweak this or fix this. You know, we're all here to fix Bitcoin. Bitcoin would be better if it had a little bit more elastic supply or whatever. But then as you get, baptized in the fire of the market, you learn that Bitcoin is pretty much perfect the way it is.
Yeah, well, I guess the thing that's perfect about it is that you can't fix it. You can't change it. It is what it is. And
very true.
There are properties that I would say are ideal, but maybe there's some smart people out there who could point out some unideal properties, but it doesn't matter what you think. Bitcoin doesn't care. It's going to keep doing its thing. Do we want to jump into like this list? You kind of like, you have an intro block here, just kind of like, I guess, previewing some of these topics.
Yeah, I mean, our main topic for today, I just wanted to touch on the reverse repo stuff. And then last week, the Fed came out on Wednesday, and had their FOMC meeting and their press conference. So they had a few changes, and that affected the reverse repos again. So I wanted that to be our main topic, but we could talk about price too. I mean, there's lots of stuff going on with price. Like we were talking just before we went on air, that this is the most bullish 2-week period for Bitcoin news, pretty much in the history of Bitcoin, with El Salvador and Taproot and
miners leaving China.
Miners leaving China, yeah. And so there's a lot of bullish news, but we see the price going down. So do you have a thought on why the price is dipping here, or what? Do you think it's a random walk?
Yeah, I mean, part of me thinks that like Bitcoin is going to just have these insane upswings, and the altcoin rallies are going to have insane upswings, and heuristics are going to get people to dump like what they perceive to be the top based off of altcoin frothiness. And it's just going to get clownier. And there's like a lot more fuel in the engine right now. But I just think that, Doge was going crazy. Elon getting onto what's it called? Saturday Night Live. That seems like that was the top, all the ETH heads calling for the flippening. Like that was the top. or the local top, like that was like enough of like heuristically top behavior for, let's just call it the nerd whales in this industry, the trading whales in this industry to, pull the trigger. Right. So
well, what
that
do you
could
think?
make
Do you
sense.
think that
And there's just momentum going down from there. But I honestly think there's just so much more fuel and real activity here that this is a good thing. Kathy Wood was on the Bitcoin Magazine podcast before Bitcoin 2021, and she said that institutions don't like to top tick, and like as they were getting maximum FOMO, they were also like had the the reaction of not wanting to buy the top. So I think that this is healthy. Like this is what we need to see. And unfortunately for the weak-handed plebs out there, I think institutions are going to be taking advantage of them.
Yeah, and I think that there's something to be said for over leveraging in the altcoins. Like with DeFi, the whole idea behind DeFi is leverage. And so I think that they got really levered up. And this Chinese news, I mean, Chinese they like their shit coins, right? And so I think that the China news might be even worse for altcoins and DeFi and things. And since those are so over leveraged, they could have a kind of an effect on the overall market. So yeah, I think it's good, obviously, but it's hard to make it through the doldrums of, like the midsummer or the mid-cycle part of the market.
Yeah, I mean, I feel like Bitcoin really picked up in 2017 after the summer into the fall. So that trend hasn't fully broken yet. Again, we were just saying that every bull market is going to be unique. This one absolutely is unique. Taproot, if anything, is like a coordination success story so far. I guess it's too early. November is when it will actually, look to safely lock in and activate. But Segwit in 2017 was literally the opposite. It was like the conclusion of a bloody fist fight. So the story and the background is different here. The level of adoption, the level of high level advocates, the level of mind share is completely different. So I don't know. I think Bitcoin's going to take the way of most pain too. So a lot of Bitcoiners were like super cycle, that was like our version of the flippening is the super cycle, right? So when you started hearing super cycle, that was probably, and I am guilty of that too, for sure. Yeah. This time is different. I did Bitcoin Tina number 5, the super cycle podcast. So, it is what it is.
All right. Well, do you want to jump into the Fed stuff?
Yeah, let's do it.
We start with,
before that, let's tease next week.
Yeah.
Bam. We got a good one for you guys next week. I have really been enjoying working with this guy, Aaron Segal, who is in legacy finance, recently gone super orange pilled, and has put out 2 really, really excellent pieces of content on Bitcoin Magazine. I've been promoting them a lot on my Twitter, but the first one is Bitcoin Information Theory, which I sent to Ansel. I thought it was really good. I think it goes way beyond this idea of digital gold and kind of ties Bitcoin into what it is like perfect information, perfect price, and kind of goes into like what that means from a thermodynamic perspective. But his second piece kind of talks about like the pitfalls of the inflation narrative. And I think he does a good job of like getting into the nuances. Jeff Booth has helped him with both of his pieces. So both Jeff Booth and Aaron Segal are going to be coming on to Fed Watch. So I'm really excited to have that conversation. Really dive, we've talked about inflation versus deflation. That's like one of our favorite topics. So I think, we can have some really top thinkers and really contrarian thinkers, I guess, if you want to say the dogma is inflation. It'll be a really good conversation about that to join Ansel with them, and I'm just going to kind of sit back and, ask my questions.
Yeah, it's refreshing. I haven't had a chance to read this new piece that you sent me. I skimmed it and it looks really, really good. But it's refreshing to see people coming at this topic from all sides of the debate and kind of throwing out what doesn't work and adopting maybe some new perspectives. So yeah, this will be a great episode next week. Can't wait.
All right. Well, yeah, hit us with some of these next topics. I mean, reverse repo, that's a pretty big news line here.
Yeah, I think maybe we should hit the FOMC stuff first. Just last week, they had the most recent FOMC meeting where they get together, and discuss Fed policy, and then they have their announcement on what they're going to do with rates and everything. Big thing for this was they kept rates the same, or the Fed funds target rate, they kept the same. They kept the same for QE that they're doing. So everything was kept the same. On their headline policy. Now, the one thing that did change was the dot plot. And this is a relatively new thing in the last 10 or 12 years since the great financial crisis, that the members of the committee, they will put like just dots on a simple chart where they think the rates will be at certain times in the future. And some of the dots moved forward. So it seemed like the people on the committee are expecting more rate hikes sooner. And I mean, it's nothing official. It's just like, it's never been right before. I don't know why it would be right now, but that was a big change. And initially that was what the market like clued in on as these dots moved. The bigger change though, is in the reverse repo facility and the IOER interest rate. So both these things increased by 5 basis points. And
wait,
the repo,
real quick, can I pause you real quick?
Yeah.
So I want to interject just for, let's just say, some newbies who might be tuning in. Can you break down both of those acronyms?
Which ones?
The sorry, I can't even say
IOER.
The IOER, and then talk about what reverse repo is.
Okay, IOER is interest on excess reserves. So if when banks take part in QE, they don't get money. They get reserves held at the Fed. And so those reserves held at the Fed will pay an interest rate. And it was 10 basis points, which is pretty good in today's market, actually. And they raised that from 10 basis points to 15 basis points in this last meeting. The reverse repo.
The Cantillon insiders got an interest rate hike on their holdings.
Yeah, and IOER is actually one thing that I'm unclear on whether to consider that money printing, because I don't think QE is money printing, but IOER is different. It's fundamentally different, and that could be considered money printing, but I haven't really dove into that too much. The reverse repo is, okay, so repos are repurchase agreements. They're overnight loans that are collateralized. So if I'm a bank and I need $10 billion overnight, I can get that $10 billion, but I have to put up collateral. And usually that's T-bills, treasury notes, some treasury bonds, mortgage-backed securities, any of these like supposedly very low risk securities. And so I can put that collateral up and get the cash. But then the next day that unwinds. I have to give the cash back and get my collateral back, or you can roll it over. But and that's what usually happens, is you just continually roll it over every day and you never repurchase it actually. Reverse repo is the other way, where I don't need cash. I need collateral, or I want collateral. And so I give cash to the Fed or to the counterparty, and they give me the collateral, whether it's a security or whatever. And what we've been seeing recently is 0% from the Fed in regular repo transactions, but we see hundreds of billions of dollars every night in reverse repo. So that's what reverse repo is. And that went up from 0% to 5 basis points. So as the bank is giving their dollars to the Fed and getting collateral, they're also getting 5 basis points now. And that's a really significant change. And we'll go into why that's a significant change. Any questions?
That's my last question. Let's get into why it's a significant change. Break it down.
Okay, because it's a significant change because T-bills are under that. So let's say I need collateral on the free, like I need collateral in the free market. I can go and buy T-bills, right? And I might get it for 3 basis points. So they're going to pay me 3 basis points to buy their security. Well, why would I do that if I can get 5 at the Fed? Right. So there's no reason for the free market even to exist in these bills if I can just go to the Fed and get paid more. Yet it's still sticky down there. The 1 month, the 2 month, the 3 month bills are still under 5 basis points. And it's like, why is that working? Why is that staying down there? Well, what I and Jeff Schneider and others now have come to think is that it's because there's so much shortage of collateral out there that they've exhausted the Fed overnight, because they're limited to like 80 billion per institution overnight. And if they hit up their 80 billion and they still need more, then they go into the free market to buy the rest. And
It's like
so
a
that's
tier.
why I think, yeah,
Yeah,
exactly.
it's like you top up your max tier at the soup kitchen line, and then you can figure out how to get the rest on the black market. I mean, it's like
Yeah.
it's a real market, but it's like the whatever outside of the soup kitchen, I guess.
Yeah, but it exposes this incredible, almost insatiable demand for collateral right now. And why is that? I mean, it's not because we're in some, new growth phase, some reflation is continuing. It's probably not that. I think it's that these repos have spiked, and people want collateral because the opposite, because we're slipping back into recession and back into contraction. And so people are fleeing to safety, and they will buy as much as is issued.
I mean, it looks as though like that's throughout all of the economy, right? And like, let's call it sailors calling these, asset inflation. But really it's just people fleeing to stores of value. And, I guess that kind of ties a little bit into both of our bull theories of Bitcoin, is that Bitcoin is like this perfect solution to that need, right? And it's a permissionless, and from a scalability and accessibility perspective, much better system than what we're currently dealing with.
Yeah, and that kind of sums up the whole issue. Do you want me to get into how this evolved? I took some notes on that.
Yeah, let's keep it rolling, man. You are the maestro here.
Okay. Well, maybe I should write better notes then. So the big issue going into the summer was that, the inflation scare. Everyone was worried about inflation was coming. Inflation was coming. Oh my God, the Treasury General account, which is the government's account at the Fed, was flush with cash because they had borrowed so much during the pandemic that, they had a 1.2 trillion in there to spend. And that was going to be coming down and spent out into the economy. So that was going to flood the market. Also, we had the stimulus checks that were going to flood the market with deposits and with cash. And so everyone at the beginning of the summer, pretty much, I would say, when did we have Michael Leibowitz on the show? Like February or March, people were already talking about that this was going to flood the market with all this liquidity, and prices were going to surge, and inflation was going to really take off. And we have seen some CPI going up, but not significantly, really. The way CPI is measured, right, is year on year. So if you see a big print like we just saw for May, we saw 5%. And not core, that's like the headline number was 5%, but that's year on year. So you're comparing that to last May. So last May was, at the depths of the lockdowns. And the worst part of the economy last year was what they're comparing this May to. And it was only 5% better than that. So, or prices were 5% higher than last May. Sorry, my wife just came home. And so where was I? All this liquidity was flooding the market, and we didn't really see a lot of inflation. What happened was that deposits were coming into the system, but they weren't making it into the economy. They were making it back into these reverse repos. I don't know, man. I'm derailing here, Christian. Save me with something.
So you feel like these reverse repos are just like they're just sucking up all the collateral, really, and it's just kind of like keeping it into like just this one function. and it's not even enough to satiate, the needs.
Yeah, well, one of the things about banks is they can't necessarily take on more deposits. Like a lot of people think, oh, well, why can't they just deposit it into the bank? And the bank will have, they'll increase their deposits by 25%. But banks can't do that because, one, they have a fiduciary duty, and it costs money to hold other people's money. Like you have overhead and, all this other stuff. And so you can't just hold cash. You have to invest it in a positive carry. You have to get positive carry somewhere for this, both fiduciarily and also the market will demand it, because the market is all your competition. All the other banks out there that you're borrowing and lending from, that you're doing these repo transactions with all over the world, they're looking at you. And if you're not doing the optimal thing, if you're just holding cash, man, something's wrong with that bank, right? There's a risk there. So we're not going to do any business with them. Oh no, now they're shut out of the entire system and we have a freeze and a
structurally
crisis.
Like that, right?
It's structurally like that. Yeah.
Like it's very hard for there to be a full reserve bank. Like it was even like legally forbidding, correct? So like this is not just like, some sort of like market bias. Like this is an institutionalized and top down kind of bias from from a legal
it's a
perspective.
result. Yeah, it's a result of the form of money, I believe, right? When you have credit-based money, you have these credit-based shenanigans that go on and the big web of debt that is all over the world. And so a bank must do this. They must do that, because if they don't, the system freezes, right? And all of their stuff goes to zero. So, and when you flood the system with deposits, you must also have the same balancing amount of collateral. So you have both must go up at the same time. And if they don't, then you have problems, because like we said, you have specific things in the financial system that must be balanced and must move together, or else it freezes up. So that's what they're facing. Instead of inflation, what we got was too much cash and not enough collateral shortage. And so that's why people went into the reverse repo. They have this demand for collateral because there's too much cash in the system. And that sounds really funny that adding cash actually leads to illiquidity, right? But that's exactly what we're seeing right now.
I mean, there's just so many freaking moving pieces here with this just complex system, and the Fed doesn't have the information, right? They can't crunch the numbers in an appropriate way to make any sort of manipulation without royally fucking stuff up. And then in terms of like managing impression management and the politics and the formalities and all this other stuff on top of it, that that even handicaps them more, right? Because they have to say something, they have to double down on it. People react on where their dots are on the chart. It's a very difficult place that they're in. I'm kind of curious, like going back to the FOMC meeting, like what are your predictions on like the fallout of some of these changes are going to be?
I don't know. I mean, you bring up a really good point that they're almost stuck. The Fed is almost stuck because they have to do QE. They have to do QE. If they don't, you have a taper tantrum. If they start trying to taper, people will see that and react as if it's negative when it's not. Because a taper would actually be respecting or acknowledging the market needs more collateral. So why would the Fed be buying this in QE, taking the collateral out of the system? What we should do is limit QE and keep that collateral within the system. Then we can stop this collateral shortage. But they've backed themselves in the corner, because if they taper, it will be seen as a negative to the market, because everyone's been primed to think that this is the punch bowl. This is the only source of liquidity is the Fed. The Fed is the only part of the market. And as soon as they start tapering, it's an expectations or a psychological problem, because the market will think that it's going down or something's the punch bowl is being taken away. So we need to be more conservative, and it's a self-fulfilling prophecy. So they have to cut back on QE, but they can't. So they're stuck in this crazy dilemma. We should name this dilemma something.
We should. And you know what it kind of reminds me of? It's like during the bubonic plague, the Black Death in Europe, like all of the doctors, everything that they were doing was completely wrong to try to solve the pandemic and just made it exponentially worse. You know, one of the main things that they were doing, and you can look back at the history books, but they were like cutting off there would be like these welts, these black welts growing on the people's like skin. And so they would cut them off and expose them. And they were obviously weren't wearing masks, gloves, any sort of protective stuff. So effectively, they're just mass exposing people to the virus by kind of like severing these,
cutting open the pus. Yeah,
exactly. Yeah. So like that feels like what is happening right now. It's like the problem is there's no, and we've talked about this on this podcast many times. Like there is no collateral. Like that's one of the problems based on what you are saying. And then QE is the process of taking out collateral and turning that into illiquid bank reserves. So like taking out real market collateral and putting that value into the lockdown illiquid system, right? It's like it's you know, I don't know. It seems like the bubonic plague, you know, doctors, you know.
Well, I've used a similar analogy to bleeding. So the picture the Fed as like the doctors 300 or 400 years ago, they're actually bleeding the patient, thinking that it's going to help them, right? But in reality, they're just making it weaker and weaker and weaker. So yeah, the Fed is bleeding the economy, the global economy, really. And it can, I mean, you can live after a round of bleeding, but every time you go through that, you know, your body will get weaker and weaker. So yeah, I've used that similar example.
That's a little clearer. I like that better, guys. So this is why Ansel is the expert, and I just throw out my comments. So I mean, I think that was a pretty good breakdown. I guess anything else that we can make out of the FOMC? I know people were reacting to it last week.
Yeah, just that this doesn't spell imminent danger. I wrote a blog post on specifically on the reverse repo stuff before the last FOMC meeting. And I said it doesn't signal imminent danger, like say 2 weeks from now, everything's going to crash, but it just says that the market is extremely fragile and any major event can really cause a crisis. And so those types of events usually happen around the end of quarters. We're coming up on the end of a quarter right now. The second quarter is not traditionally really volatile, but if it continues like this until the next end of the quarter, then I can see there's something happening, some event happening around the end of Q3 that could cause a new crisis.
Yeah, I mean, and it's just weird, like talking about Bitcoin here. Like this is supposed to be the Bitcoin bull market, 2021.
Yeah.
4 years after 2017, you know, all we've been saying, you know, all of these bull markets, they rhyme maybe, but they definitely are unique. There's very unique aspects about this one in particular, and some of the macro things are happening. But it's like, this is the first time in a bull market where there seems to be like a lot of weakness and fragility in the traditional stack, right? And we're seeing like the Fed grappling with these issues and have to be very active. You know, we're seeing repo markets like having issues even before coronavirus, you know, obviously the political shit show that is coronavirus and all the lockdowns that are associated with that and supply chain disruptions and all that kind of stuff. Like there's just so much freaking chaos now that is just exposed. And here's Bitcoin trying to operate within that. So it is a unique environment. And at the same time, just so many bullish things are happening and awareness is like through the roof. Like, do you have any kind of commentary on like, you know, the big picture of Bitcoin fitting into this macro craziness?
Oh man. I mean, yeah, there's a lot to be said. I see Bitcoin and you and I agree. I'm 100% on this, is that Bitcoin offers like this island of certainty within, you know, an ocean of chaos. And so I think that is how Bitcoin is going to be seen going forward, especially if this bull market does turn back around here soon and has a good second half of the year. as we see a lot of like the dollar is also turning around and getting stronger right now, and that causes chaos when that happens. And so I can see like traditional markets being volatile in the second half of the year, while Bitcoin is returning to its bull market towards the end of the year. And that would really set Bitcoin apart from the rest and give Bitcoin a very good value proposition.
I mean, and I kind of want to just tie what you just said into, Bitcoin information theory with Aaron Segal, who's coming on next week, and a current event that's happening right now, this hash rate exodus from China, it seems. According to Aaron, the whole equation of life, everything that's happening right now, like, human society is taking entropy and converting it into information, right? Into converting it into order. And if you look at like what's happening in the Bitcoin system in terms of like the chaos in the world, and then Bitcoin turning it into order, which is confirmed transactions in a 10-minute block, every 10 minutes, there is enormous amounts of chaos that's happening on the mining side, on the geopolitical side, on the narrative side. But yet, if you look at the conversion on the other side of the system, we're looking at 11-minute block times, like a 10% shift in the output. Like it's incredible. If you just look at that function as a one-way function, like how well does Bitcoin produce order out of all the chaos that's being input into it? It's just like absolutely incredible. And like the closer we get back to a 10-minute block time, it just shows how freaking strong and resilient the system is. And then you contrast that to like us talking about the Fed putting their predictions with the freaking dots on the paper and, pulling all these levers and how these banks are like falling apart. Like it's crazy. Like, I don't know. Does that like analogy, does that comparison make sense?
Yeah, it does. I like the visual of the dot plots versus like a block explorer. Like you can see the blocks coming in and it's perfect every time. We know the supply, we know the amount of transactions, we know everything about the network in every single block. And then you compare that against the dot plots. That's a good visual. I like that.
I mean, and like talk about like the Bitcoin market being manipulated again. Like how much did the market move on like freaking dots by economists working at the Fed that we know they don't know what they're talking about? Like if you look objectively through history, all of their predictions are chronically wrong. That's brought to us by our good friend Parker Lewis. Like, he's just like, it's such a paradigm shift. It's unreal.
100% agree. That's all I have for this one. I mean, that's all the notes I took. Do you have anything else to add?
I mean, now I can just rant about Bitcoin, I guess, but we could also close it out, y'all. This is a fun little rip. Always love getting on with Ansel. Really pumped to get on with Jeff Booth and Aaron Segal next week. Give us your feedback. Yeah, what do you have to say here?
Yeah, give us your feedback. And is there something you guys want us to look into? Part of this show is to watch the Fed, try to dissect what they're saying and what they're doing, and relay the information to you guys. So whatever you guys want to hear about, let us know either on Twitter or on my Discord, wherever. And yeah, it'd be great to get some audience input. Maybe we could do a Q&A episode. What do you think about doing that?
Yeah, we should organize it, get some questions out, maybe do a form or something like that. And yeah, let's make it happen. I think cool. I should just do, I like having my private Q&A with Ansel, but we can open source it too. I'll allow it. All right, y'all. Well, you guys can find Ansel at Ansel Lindner, all of his websites on his Discord. You can find me at CK_snarks and at Bitcoin Magazine. Give us those 5-star reviews. Like I said, you know the drill. Share, retweet, all that stuff. Some of y'all been DMing me, telling me how much you like the show. Don't tell me. Tell the world. Tell your friends and family. They're the ones who need it. I make the show. All right. Peace.